Chapter 4. Offshore Financial Centers. In this chapter, we will cover an introduction to offshore financial centers. Functions of offshore financial centers. Facilities offered by offshore financial centers, and types of institutions under offshore financial centers. End of this chapter, you should be able to determine the meaning of offshore financial centers. Discuss about the functions of offshore financial centers. Explain the facilities offered by offshore financial centers, and elaborate types of institutions under offshore financial centers. Introduction to Offshore Financial Centers, OFCs. Zoram 2007 defined the offshore financial centers as the jurisdictions or authority that provide financial services to non-residents on a scale that is excessive, compared to the size and the financing of their domestic economies. Offshore Financial Centers is also called as International Financial Center, IFC. Offshore banking means a bank that is located outside the country of the depositor's residence. Meanwhile, onshore banking refers to a bank that is located inside the country of residence of the depositor. The more practical definition for offshore financial centers is a center where the bulk of financial sector activity is offshore on both sides of the balance sheet, in which the counterparties of majority of financial institutions' liabilities and assets are non-residents. Offshore financial centers offer a significant tax and regulatory advantages as well as providing clients from other countries with international banking services. The services offered by offshore financial centers are mainly for non-resident clients. Offshore financial centers play a significant role in mobilizing international capital flows. International banks play a dominant role in the offshore financial centers due to their structure and nature of business. Please refer to Table 4.1 in the textbook for the designated offshore financial centers, and page 101 until 105 for the offshore financial centers locations. There are some differences between offshore and onshore financial center. First, offshore financial centers provide banking services mainly for non-resident clients, while onshore financial center mainly serves resident clients. Second, in offshore financial center, all services such as fund management, brokering, insurance, holding company registration, fiduciary services, and internet gaming are available. Meanwhile, in onshore financial center, not all services are available, such as fund management, brokering, insurance, holding company registration, fiduciary services, and internet gaming. Third, offshore banking has a comparative advantage in terms of property rights protection, legal and tax advantage, and domestic financial regulations. Meanwhile, in onshore banking, there is no comparative advantage in terms of property rights protection, legal and tax advantage, and domestic financial regulations. And fourth, example of an offshore financial center in Malaysia is Labuan International Business and Financial Center, or Labuan IBFC. Meanwhile, for the onshore financial center, all financial institutions that are governed under the domestic government are considered as onshore financial center. Offshore financial centers have a number of key considerations or advantages such as low or no taxes. Services provided are mainly for non-resident clients. No or limited forex controls. Has a geographical proximity to a major economy. Has a good communication and connectivity, or networking. Offshore financial center has a set of practice or procedure that supports the bank secrecy, and it has a high degree of political stability and personal safety. Reasons for someone associated with offshore financial center can be divided into legitimate purposes and illegitimate purposes. Among the legitimate purposes are privacy for personal or family business, or because of political reasons. Other than that, to keep funds separate from their daily use in case of inheritance, divorce, or personal bankruptcy, and people also associated with offshore financial center for the purpose of keeping funds in a secure bank in a secure country. Meanwhile, for illegitimate purposes, people tend to deal with an offshore financial center to launder money from criminal activities, and to evade taxes. There are some common reasons on why countries seek to develop themselves as offshore financial centers. The first factor is due to the fact that the particular country may have little land base, and few opportunities to develop other types of economic activities. This situation is caused by the limited energy supplies, limited raw materials and other natural resources, and long distance from raw material and energy resources. The second factor is because that particular country possess natural characteristics that make it an ideal offshore financial centers. Those characteristics are political stability, close geographically proximity to wealthy countries, have a well-educated manpower, have some natural amenities that could attract tourists, have a political willingness to pass bank secrecy laws, and be prepared to invest in policing and security infrastructure. There are 5 functions of offshore financial centers. First, offshore financial centers is a jurisdiction provider for a relatively large numbers of financial institutions, which engaged primarily in business with the non-residents clients. Second, offshore financial centers is an entities that manage the financial systems with external assets and liabilities, out of proportion to domestic financial intermediaries, which is designed to finance domestic markets. Third, offshore financial centers have a function as the international centers which provide financial services with low or zero tax, moderate or light financial regulation, banking secrecy, and anonymity. Fourth, offshore financial centers need to maintain extensive legislation, and to take measures to reduce criminally related activities through enhanced enforcement, and in certain cases, information sharing with other nations. And fifth, offshore financial centers must have, or maintain the necessary structure for providing the varied services required by global clientele. There are 4 types of facilities offered by offshore financial centers. First, offshore savings account. Second, offshore current account. Third, forex services. Fourth, offshore investments. Offshore savings account. Some people think it requires millions of dollars to open an offshore savings account. But actually some offshore savings accounts accept opening deposits as low as $1, and it should be denominated in foreign currency. However, someone may have to invest a minimum of $5,000 to $10,000 to open an offshore savings account. This is due to the high operating charges. For example, the depositor can be charged with the fee as high as $25 a time for making withdrawal. So depositing a small amount does not make a financial sense. Offshore current account. Offshore current accounts vary with onshore current accounts because it is normally offered in foreign or major currencies. Depositors can use debit cards to withdraw money in either dollar, euro, and sterling currencies for free. This can ease the movement between accounts, and also can protect their money against currency fluctuation. Forex services. Among the services available under the foreign exchange are, converting money for a property, making regular payments in a foreign currency, money exchange due to moving to a foreign country, making a foreign currency payment at a specific time in the future, managing the client's overall foreign currency exposure, forwards contracts and spot transaction, and managing currency risk, such as liquidity and fluctuation. Offshore investments. The types of services offered by offshore investments include the structured notes and structured deposits. Structured notes are a type of debt security. It is an over-the-counter derivative with hybrid security features, which combine payoffs from multiple ordinary securities, typically a stock or bond plus a derivative. Meanwhile, structured deposits is the combination of a deposit and an investment product, where the return is based on the performance of underlying financial instruments. Attractions or advantages of offshore financial centers investment services may include: no capital tax, no withholding tax on dividends and interest income, no tax on transfers, no corporation tax, no capital gains tax, no exchange controls, light regulation and supervision, less stringent reporting requirements, and less stringent trading restrictions. 4 types of institutions under offshore financial centers. First, international investment bank. Second, offshore banks. Third, offshore corporations or international business corporations, IBC. And fourth, insurance companies. Types of institutions under offshore financial centers. Under the International Investment Bank, deposit may not be subject to reserve requirements. Bank transactions may be tax-exempted and may be free of interest and exchange controls. Meanwhile, the offshore banks is subject to a lesser form of regulatory scrutiny, and information disclosure requirements may not be rigorously applied. Offshore corporations or international business corporations (IBCs) are limited liability vehicles, registered under offshore financial centers. They may be used to own and operate businesses, and to create complex financial structures. International business corporations may be set up with one director only. In some cases, residents of the offshore financial center's host country may act as a nominee directors to conceal the identity of the true company directors. In many offshore financial centers, the costs of setting up IBCs are minimal, and generally exempt from all taxes. IBCs have become a popular vehicle for managing investment funds. In Malaysia, Labuan has been developed as an international business and financial center, IBFC. For insurance companies, a commercial corporation establishes a captive insurance company to manage risk and minimize taxes. An onshore insurance company establishes a subsidiary in an offshore financial centers to reinsure the catastrophic risks underwritten by the parent, and reduce overall reserve and capital requirements. Offshore financial centers offer the advantages of favorable income tax regime, and low enforcement of actuarial reserve requirements and capital standards. We have completed Chapter 4, please read the textbook for detailed explanation. Thank you.